How's it going, everybody? Thank you for tuning into the CEO Barbecue. My name's Antonio, and I'm interviewing CanAlaska CEO Cory Belyk today. But before any of that, as always, fair disclaimer and honest confession, both me and Mr. Belyk own shares of this company, so anything that you will hear in here is going to be biased, and it will contain a lot of forward-looking statements, and as always, hopes for the future. Resource Talks is not receiving any financial compensation for this conversation, and this is also a conversation that is going to be general and impersonal in nature, and as such, it's not going to constitute any investment or financial advice whatsoever. That all said, Mr. Belyk, thank you for investing your time with me, sir.
Oh, Antonio, it's a real pleasure being here to talk about CanAlaska, to get to know you a little more, and yeah, just have this conversation and see where we take it. You know, it's a pretty exciting time in the nuclear space, and yeah, I'm happy to be here today to talk.
Definitely. Pleasure is all mine. Definitely an exciting time in space, in the nuclear space. So we're going to be talking about that as well, hopefully. And I know the story of CanAlaska. As I said, I am a shareholder, but I'm not sure that too many people do, because you're a $40 million Canadian dollar company, and you're now trading at about the same level that you were trading in 2021, even though you made 3 new discoveries last year. So that's an interesting topic to target. Why don't we start off with a 30-second overview of what CanAlaska is and what you guys' thesis is for finding uranium, and maybe also tell me about what type of deposits you're looking for.
Yeah, absolutely, Antonio. It's we're a junior company, as you articulated. We're focused on uranium. I mean, that's our love, that's our forte. Our team has got a lot of experience, really 140 years in the uranium space in the Athabasca Basin, and lots of discoveries within that portfolio of people as well. But you know, as much as we're focused on uranium in the Athabasca Basin, that true unconformity related target, we've also got a great asset portfolio in copper and nickel. So if you think about it, it's an interesting model where you generate clean electricity through nuclear. You got to move it through copper, and you've got to store and deliver it to the end user in the nickel space. So it's really, when you think about it, really connected across our portfolio of 3 main metals. But again, we're focused on uranium. That's our love. That's our forte. And again, Athabasca focused, and we believe that's the place to be to make discoveries.
Okay, you do say that you're focused on uranium, but you do have different properties with different metals too. To just mention, there's also there's actually a schedule on your presentation that says that you'll be drilling the copper property in January. You're also technically exploring for nickel, and I saw even something about diamonds, which was kind of confusing. Maybe we can talk about that later on. But I'm not sure that as a shareholder I would be necessarily happy with you spending money on anything but uranium right now. So how do you justify the diversification, I guess, of funds and attention here? Doesn't it take away from your ability to make it worth your while with uranium in the Athabasca Basin?
Well, I think to answer that question, you have to step back and look at what we've come through. We came through a very long period post-Fukushima with no interest in the nuclear space at all. It was really hard to generate any kind of activity, any kind of funding ability to actually explore for uranium. But we managed through the last cycle to hold on to all of our properties in the Athabasca Basin. And we've been strategically picking up new ones where we felt the geology made sense, just ahead of last September when the market sort of started to turn. So we were really focused on uranium. Now, the copper side, as much as we've got copper in our portfolio, the drilling program that you're referencing actually was done by Dominica through a deal. We brought in their funding. We didn't spend much, if any, of our money on any of that program to share the interest and the risk in that project with another party. So that didn't cost us really anything. Then you look at the nickel space. We did a little bit of drilling in 2019 to prepare the Mana Bridge project for another deal. And that's what we've done. We've brought in Metal Energy to actually invest up to $4 million in that project. Again, not really using any of CanAlaska's money other than from the project generation phase to go pick up the land, promote it, a little bit of drilling to prepare it. And then we've done that elsewhere in the Thompson Nickel Belt in Manitoba, in that really prolific nickel space where, you know, we do just enough work to prepare the projects for that next deal. We don't really want to spend our uranium money there. But how do you create shareholder value when no one wants to talk about uranium? And that's what we went out and did. We built a district scale nickel portfolio in Manitoba. It's the 5th largest sulfide nickel belt on the planet. So we really haven't spent a lot of money there per se. And now the market has turned for uranium, and we've got interest back. And we had, as you articulated, 3 new discoveries last year in our portfolio. We're looking to move those forward fairly aggressively this year, and that's what we're doing. So we are focusing our uranium money in the uranium space, trying to find the value for copper and nickel elsewhere, and not use that uranium money for those other metals.
All right. Well, let's focus on those uranium properties then, because
sure.
you have a joint venture with Cameco. It's a pretty big name. I'd like to have a joint venture with Cameco, that's for sure. How does that work, though? Like, maybe how does that work, and what are your plans for it? Like, would Cameco buy you out if that ever becomes a mine, or would you stay as a non-operating shareholder, get a royalty or a residual interest of sorts, or something like that? What do you think?
Yeah, there's a lot of opportunity there to do any number of those, to be honest. So by bringing Cameco in 2015, 2016, really, when we did the deal, and I was actually with Cameco at the time. I've got I had almost 25 years with them. So I was actually part of that team that brought Cameco into the joint venture at West McArthur, because they saw what was happening at their Fox Lake deposit nearby, just a few kilometers from the boundary. And they knew that the mineralization was trending onto the property. So in 2015, I was tasked with bringing Cameco into that project, doing a deal with Peter Dazzler at the time, the CEO and still president of the company at CanAlaska. So we sat across the table and worked with each other to bring Cameco in. And Cameco was really interested because they were seeing a new uranium corridor forming up on their side of the boundary, the Reed Lake project next door. And they had to get involved. So they had an option to come in for 30% and then a staged option to 60. They started that process, and I think it was around 2016, 2017. They drilled a number of holes, earned their 30%, and with that came the initial discovery holes that are 42 zone. So the initial 5% grade mineralization near the unconformity, classic model, just like Fox Lake. And then, Cameco started to curtail their spends, and they went from, 100+ million globally down to sub 10 million, and really centered back in the Athabasca Basin. So they couldn't do it all, but they were happy to stop at 30% interest because it gave them a joint venture now, a co-funding joint venture arrangement, or they can dilute, whereby they retain certain interests as well, like rights of first refusal. So they got their toes in the door on the project. They're happy to come along for the ride with us as a joint venture partner. Now, in the last number of years, they've been diluting, and they diluting from the essence that they can't do it all. They only have a certain amount of money to spend. It's very low for a large company like Cameco. So they started to make choices, and they were happy to sit back and watch us progress the project in 2018. And we were happy to do that because we saw what was happening. We had 42 zone discovery. We've been working there, drilling 8% uranium in a couple holes. So it looked pretty good. Last year, we started to move that forward, continue to move that forward, and the results dictated that we double the budget year over year for 2022. And now we've made a new discovery at West McArthur. So Cameco's very much along for the ride. They do have rights of first refusal, but we're free to shop the project. We're free to shop the interest. We're free to bring another party in. There's all those mechanisms there. They just got certain joint venture rights which protect their investment and their opportunity. So it's wide open in terms of what deal we could do at West McArthur. Ideally, you'd want to see Cameco involved because they have the nearby processing facility at Key Lake, which is going to need feed in about 15 years. They've got McArthur River just 12 kilometers away. We drive here year round from that haul road that hauls McArthur ore. So it's very well positioned strategically for our partner Cameco. And they do have a need, in the next 15 years or so to find the source of feed for Key Lake. So it's a great scenario for us.
Fair enough. Yeah, looks like it. You just mentioned that you're looking for an unconformity alteration deposit like the Fox Lake discovery that Cameco did a while back. But here's the thing, they were drilling there. What did they start in 2008? I believe, something that I read.
Yeah, I think the first holes were somewhere around that timeline. Yep, into that initial mineralization at the northeast end.
Right. But Fox Lake is still nowhere near production, right? Despite it being defined and ready for development for about 6 years now. 2016 is also when they defined it, I guess, when they put out some numbers on it. Looking further into this type of deposit, also what I noticed is that those are generally rather deep. They're hard to find, hard to build, lengthy to permit, basically. So they don't generally go into production quickly, if ever, but definitely not in the same cycle that they've been discovered. So forward-looking statements here, of course, But do you think that this time could be different for you, and why? And if it's not different, if it does take a long time, what do you think exactly is the value add here for that project?
So let's just be clear. It does take about 12 to 15 years to put one of these large deposits into production in the Athabasca Basin.
Mm-hmm.
That's well known. You can't get around that. That's a permitting process. CNSC's involved, provincial jurisdictions, local stakeholders. That's just how long it takes. Doesn't matter what you find in the Athabasca. That's what it's going to take. We know that. That's fine. Cameco knows it. Orano knows it. NextGen knows it. They're experiencing it right now as they work through their Arrow deposit. So that's just reality. So what we think is going to be different is that we're not actually looking for Fox Lake. We're looking for a Fox Lake that's much bigger. We're looking for a Cigar Lake. We're looking for McArthur River. We're looking for these big deposits. We don't want to find another Fox Lake. But what Fox Lake tells us is that we're on a very heavily mineralized corridor, uranium corridor in the Athabasca Basin. And these don't happen everywhere. They're very rare to find where you get the alteration signature, these large alteration systems, which is an indication of the water you've moved carrying this uranium through the system. And you have potential to deposit the high grades like McArthur and Cigar. And that's what we're looking for. You know, along trend from Cigar Lake, you find similar zones to Fox Lake. Along trend from McArthur River, you find similar zones to Fox Lake. These occur. What they are is a signpost, an indicator that you're in the right environment for major deposition of uranium. And when you see Fox Lake producing 70 million pounds at an average grade of 8%, you know you're very close to the right size of deposit. You just don't have enough contained uranium in terms of pounds. So you need to be looking for something that's definitely over 100 million pounds. You need to be looking something that's preferably 150 to 200 million pounds. Wow. Again, that's the size we're looking for out here. And yes, you're correct. It is deep, but I will caution naysayers that, Cameco and Orano both have been exploring at 900 meters depth for the last 20 years successfully. And they're not shy about being able to put something like the McArthur Cigar into production at these depths. They wouldn't be investing there if they thought they couldn't do it. So by Cameco coming into West McArthur, they're aware of the depths. That didn't stop them from putting their money on the table. That didn't stop them from wanting to be a partner with CanAlaska at West McArthur. So again, we're looking for the big one. We've been very clear with our investors on that. We're looking for those tier one deposits like a Cigar and McArthur. We've got our eye on that prize. And what we like about this whole system is it has the right size dimensions. Think of it this way. If you get a small alteration halo in the sandstone, you get a small deposit. You get a large alteration halo in the sandstone or in the basement, you get a large deposit. They go hand in hand. So we've got a really large event happening here. Cameco recognized it early, got involved in West McArthur to get their joint venture rights, and now we're moving it forward with them as a co-funding JV.
Pretty large deposit that you're looking for there. It's got to be over 5% U3O82 to make it a tier one thing at that size. To make it really worth the look, if it's that deep, I guess it's got to be over 5% U3O8, right?
Well, I think that's geologically the context you'd be thinking, sure. But, if you start to put a lot of mineralization in the basement, maybe it doesn't have to be 5. Maybe it can be 3 or 4. It's all geologically, it has to, that has to be worked out. But if you're looking right at that unconformity, generally you're looking for something that is Cigar McArthur, and then you're looking plus 5%, maybe plus 10% in some cases. So you're looking for that very high grade mineralization like you find at Fox Lake at an average of 8%. That's ideally what we'd find. Geologic context will dictate, what the parameters are needed. But, stick an arrow down here as an example. It's a pretty nice deposit that once you get through the sandstone, it's mined pretty much like anything else. But again, it's geologic context. You don't know until you figure it out.
Right.
But we have our eye on that big prize. That's the key. That's what
right. You want to find 3 Fox Lakes next to each other, basically. Ideally. What you've been in the basin though, 17 years since 2015? I mean, not you specifically, but CanAlaska has been in the basin since 2005, I guess, right?
Yeah, I think 2004 is correct. Yeah,
okay, 17, 18
was kind
years.
of when it was resurrected and focused on uranium. Yes.
Yeah, almost as long as I've been on the planet for. But you've also spent a lot of money too there, right? How much do you think you've put in the ground? It's going to make sense why I'm asking this, but how much do you think you've put in the ground so far in those 18 years
Yeah, if you look at everything put together, I think the number falls in somewhere around $80 million.
Okay, wow.
You have to remember that, 40 million of that is Korean and Japanese money from, from the first cycle. So sort of in that 2007, 2012 range, that was all foreign money coming out of state entities like, companies like Mitsubishi, Cory, Cameco out of Korea. So that wasn't really our money, but we were doing the exploration for them. We were using their money to go out and explore these projects, sharing and de-risking these projects, and got them to this stage of information. And what that allowed us to do was attract a Cameco. $20 million of investment in West McArthur developed all these target areas. I think there's 7 of them if you look at it. Grid 5 happens to be the one that we're paying attention to right now, but there's several other areas on the project that haven't been touched post Fukushima that could have indications, just like we're seeing at Grid 5 at West McArthur, the 42 zone Fox Lake corridor. So that money has allowed us to de-risk it. When I joined the company, it was only about a 50 million share company.
Right.
Now we've been advancing West McArthur. We've taken on some dilution, but our last raise was up around 75 plus cents about 7 months ago. So we're very conscious not to dilute. And we like to do deals to bring in outside funding, bring outside money in and use it to de-risk these projects and move toward discovery. And that's exactly what we've done at West McArthur successfully. That's exactly what we're waiting to do again at Cree East, one of our other big projects, which is just sitting there ready to be drilled. It's got zones of mineralization, several of them. I think there's 9 total on the project, but we're waiting for that right partnership to come in and put the next 20 million in to move that one forward. So we've got a lot on our plate, but we like to bring in outside investment. This is part of our project generator / exploration hybrid model that we deploy. So we generate a lot of projects, bring outside parties in. That's great. Someone has to have the ideas. Then you got to find the money to go test those ideas. We generally like to use others' money to move those forward. Where it makes sense, we deploy our funds, our shareholders' money into our projects like West McArthur, where it's responding to our exploration and where we've taken it to the point of de-risking, where we now feel validated in putting our money on the table to actually go out and continue to make that discovery or build on that discovery. So yeah, it's a hybrid that we deploy.
Makes sense. More or less, at least to my simple brain. But it's why I ask you this is because you tell me that you've been, it takes on average, you say about or plus 15 years to develop something like that. You've been there for 17, 18 years. So here's a less technical, but a more shareholder focused question, I guess you can possibly an impossible question to answer to, but how much more money and time do you think you're going to have to spend on this before I, as a shareholder, make a lot of money on it? Because if you're telling me wait 15 years before you go into production, turn it into cash flow or take some kind of a royalty, maybe that's too big of an ask. But is there a more short-term focused play that shareholders end up making money on?
Let me be clear. We're not interested in producing uranium. We've been very clear with our shareholders about that. We're interested in making the discovery, creating an auction for those that want it, that being Cameco, maybe Orano, maybe another party. Again, at the front end of that discovery curve, where you make that big jump in investment over, say, 3 years, and then you get into that 10 to 12 year timeline to production. That's not our game to move toward production. We're focused on discovery, building immediate shareholder value, and then finding a buyer or a home for it so our shareholders realize that value of the discovery. So we're at the very front end of that curve before you tail off into the production or build capacity. We're not in that game. So we want to move to resource as fast as we can. At these depths, that takes a little longer than clearly some others, but it's manageable. And the team here has worked a lot in deep sandstone, so they know how to get at this. So, you can build a lot of value in that 3 year time frame. If you just look at a company like NextGen that in a very bad market went from 25 million market cap to whatever they are, maybe it was 2.5 billion market cap in under 3 years on their discovery and moving that through that process of delineation. So there's a lot of value in there to be built very quickly once you get into a mineralized zone that matches what you're looking for. And that's what we think we're into at West McArthur. We're into one of these zones now, just in the last month, that has that character about it. And we're pretty excited about where that can take our shareholders' value.
Okay, so it's I was going to ask you for a more specific time frame, so about 3 years. That looks reasonable to define something, prove something up. Tell me though, Cory, is you're a PGO, by the way, for anybody who doesn't know, that's a professional geologist by education. What do you think the challenges are going to be, like the main geological risks over there that you're gonna have to mitigate before you can do that, before you can actually prove that up and potentially end up making people money? What are those challenges, and what are you doing to mitigate them?
Well, we have to show size potential to the mineralization that we discover. So how can we do that quickly? Well, these depths, we have to be very strategic. So we have to stretch our money as far as we can. We have to be very conscious of our spend profile, because it's not cheap exploration out there, but the size of the prize is huge, and that's what we're after. So where we see that potential, we'll go after it. We know how to do it. There's lots of technology out there that allows us to, let's call it, economically advance toward delineating something at these depths. That's not a challenge for us. We know how to do it. Where's I going with that answer? Right now, with one hole into the mineralization of West McArthur, as an example, we don't know the geologic context yet. So we can't start running before we really do a fast walk. So we're moving as fast as we can toward that fast walk and understanding the geologic context so we can plan the next phase of drilling, which ultimately will continue to advance the target toward hopefully delineating, or at least proving to our shareholders that this could be what's in front of us. And the earlier we can give that to our shareholders, the better, because then they can anticipate waiting for that next set of results, which I think are key here. It's we got a lot more information to collect. And we can't go out and drill 30 holes in a month. That's not the space we're in, but we can strategically drill 5 or 6 holes, which will give us a line of sight to what this potentially could be. And that's what we're focused on right now. So
more specifically, the geological risk there would be the cost of drilling per meter, or what are you trying to say?
That's the financial risk. The geologic risk is we don't understand what we have yet at West McArthur, for instance. I mean, one hole doesn't tell you much, other than you have some pretty high-grade mineralization over a pretty good width that looks every bit like a McArthur cigar, Arrow, Millennium type analog with one hole. But the alteration that we see around this hole, both in the basement and the sandstone, and well away from the prime target of the unconformity, tells us we're in a big mineralizing event. So that's really encouraging. So we have to figure out what is controlling the mineralization. What is that fault geometry? And right now, it's hard to predict. I spent 5 years underground at Eagle Point as chief geologist, and I can tell you these things change very quickly. So you have to learn on the fly. You have to think. You have to go, okay, that one's negative, but what's it telling us? It's telling us to go here, and there's where we need to be. So it's an exercise in patience, an exercise in observation, and putting the data points together that allow you to plan that, really what you're talking about, the next program, which will take it to the next level of understanding, and ultimately show our shareholders the value of the prize potentially in front of them. And that's key.
Right.
It's really key.
Yeah. Sometimes you have to drill to figure out what not to do, I guess, as opposed to what to do.
That is part of the game. So much of the business is, and I don't like to use these words, so much of it is negative. But when you get into the positive, you have to really figure it out and then work to move that forward. So we're into the positive right now. And I always look at you always learn something from every hole you drill. And every hole should have a chance, or you shouldn't drill it. And that's just sort of the way we approach things. And we're right now drilling holes that everyone has a chance. And everyone's building off of an opportunity that we have in front of us. And, results are going to dictate where this can go. Absolutely. But, we've got 6-7 kilometers of open space now along a heavily mineralized corridor that is part of a brand new discovery for us. So it's going to take time to figure out the context. It's going to take time to figure out, whether we're even in the right spot on this system. I mean, that's something we don't yet know geologically. You just look at McArthur River, and reality is that whole system is mineralized over 15 kilometers. That McArthur forms 2, maybe 2.5 kilometers of that whole system, but you've got mineralization 4 or 5 kilometers to the southwest, which actually started the whole thing along the P2. And then you've got what UX is working on up at their Christie Lake project. That's still part of the MacArthur system, and that's 8 or 10 kilometers away. So reality is that MacArthur system is 15 kilometers long.
Right.
This is the scale we're working at. So we're going to build that knowledge out as quickly as we can at these depths and with the remaining budget that we have for this year. And hopefully that will dictate the phase 2 program, or the next program that we're going to plan to carry it forward. Again, focused on that 1 to 3 year window where we can really build the value if we're onto a major discovery for our shareholders.
Right. What about geographical risks? Caves, lakes, rivers, something else that can collapse, hold wood that can collapse over your head, or First Nations that can sort of try and stop the project, something else among those lines. Any other risks?
Hey, those risks are always out there. We know the risks are in front of us, and we work to mitigate those where we can, whether that's through consultation in terms of the Indigenous groups that we might be dealing with. We keep them very, very aware of what we're up to and where we're going with things, and our permitting process is fairly well established. So, we're working to mitigate those. In terms of lakes and things, well, at West MacArthur, for instance, we're drilling at depth. So, really the issue is that depth. And again, I come back to the fact that Cameco and Orano are not shy to explore at these depths. They obviously think they can mine at these depths. So they're the ones doing it right now at MacArthur and Cigar successfully. So I have to say that, that's sort of an uptick in saying that's not really an issue for us. Our trick is to go find something big enough that draws the attention of the major players to take it forward to production. But we can create that auction. We can create that value very quickly, get it out of our hands into those that will take it forward, and make sure that our shareholders are rewarded.
Right. They're not afraid to drill and explore at these depths and produce at these depths. So it will make sense what you're doing there right now. What about, this is an interesting question. If I give you a magic wand right now, you could wave it and you can make a potential issue or risk go away. What would you wave that stick at?
Oh, that's interesting. If I could take a magic wand, I'd say a risk of a nuclear accident. I would make that go away. Because that's probably the biggest detriment in the future for us. I hope it never happens again. I'm not silly. It's probably going to at some point. But, reality is, if we can make that go away, that risk, that would be great. And, I don't know what that looks like, but, that's probably, look what Fukushima did to the whole industry.
Right. Nobody's ever given me that answer. The magic wand question is sort of a question that I like asking pretty much every CEO that comes on. Nobody's ever given me that answer, but it's in uranium. It is particularly true. I think that could be a lot more devastating to your company than pretty much any other company specific risk that you can have, because you have a lot of ground, you have a lot of projects. So if you miss on one of those, you keep on doing, keep on drilling the other ones. But a nuclear accident can easily take 90% of your market cap off, make it so that you can't raise capital. You're not drilling, you're not finding anything up until the next cycle comes on. So I know what you mean, and that's an interesting answer.
Almost everything else can be mitigated and discussed and worked through. Where you misstep is when you misstep, and then you have to walk yourself back and go make it right. But most of the other risks out there outside of that one are generally within our control, and we have line of sight with it. I mean, the Athabasca Basin, for instance, where we're focused, is a very mature mining district for uranium. The province has wide support for it. Canadians in general have wide support for it. Are there Indigenous nuances out there that are changing? It's a dynamic space. Of course there is. But we see some of this coming. We have the right conversations, and we find ways to mitigate and move forward. So,
right.
These are well-known challenges out there, and honestly, the risks. Everything's a risk. Everything we do is a risk. But not having access to capital to go and make the discovery pretty much stops it dead. And the one way that happens is, another nuclear incident of some kind that cools it right off. And that's just the way it is.
I guess that's the way it is, right? Knowing all that, though, here's a a bait question. You're going to figure out what that is in a second. But
I might.
knowing all of that, do you believe CanAlaska is undervalued as it sits today at under $40 million market cap, actually?
Honestly, I think we are undervalued. And I know every CEO is going to say that. No, don't get me wrong. You know, they're all going to say, we're undervalued. Why I say that is look at last year alone. 3 new discoveries in our portfolio. Just when we start getting back to exploration. And, you know, I'll be honest, it's probably not yet been realized or recognized out there for its importance. And why is that important? Because I don't know of another company that has 3 new discoveries within their portfolio in a 12-month span. Right. You know, and now we've added a 4th in the last 12 months at West McArthur. Just in the last month, we've had a brand new zone. This is not continuation of the success we've been having at West McArthur. This is another high-grade mineralized zone at West McArthur that has 1 hole in it, but it's a brilliant hole. Mm-hmm. So, you know, which one of our peers in the Athabasca Basin, for instance, has that going on? I'm not aware of it. Those types of grades. I mean, it's multi-percent. We're waiting on assays, but you can look at the core. I mean, it's classic high-grade basement mineralization over 6.5 meters. That's pretty good. So, you know, I'd say we're undervalued, and the market has not recognized yet the fact that we've got a portfolio that is incredibly responsive to our recent exploration effort. And now in the last month, it's responded a little. It's gone from 30 cents to 50 or whatever it is today. I'm not sure. It's hovering around 50 someplace. So there's been an uptick on this discovery, but I think, you know, now we're going to get assays coming out from West McArthur. Now we're going to have a few more holes into this zone. Remember, we hit this very early in our program this year. We've still got another few intercepts to drill into this zone and try and figure out that critical geology, that geometry of the structure that's hosting this mineralization. And what's its connection to the unconformity? We're still 100 meters away from the unconformity. Mm-hmm. We have no idea if McArthur is sitting up above us.
Yeah, that's sort of the obvious expected answer, I guess, that I would expect you to say it's undervalued. The more interesting question is that you sort of started answering is, why isn't the market realizing that as much as it should be? Is it thanks to a bad market, relatively speaking, or is it thanks to something else? And what are you specifically going to do to make the market see that for you to start outperforming your peers?
So that's a great question, Antonio. And I think we're just stuck in this market in general, that the glass is half empty. Everybody's like, instead of having the glass half full and being positive, the whole market is just apathetic, you know. And I think that's going to change in September. I really do. I think we're about 4 to 6 weeks away from that change. And I'll articulate why in a second. So what are we doing we're staying steady to our message. We're talking to a lot of our investors, our key shareholders, especially the ones that came into our last raise last fall, up around 75 cents. You know, it's obviously we're still down from that, but we're trying to get the message out to them that, hey, we think we're onto something pretty special here that's very rare, even in the Athabasca Basin. Very rare to drill something like this and not have it be part of a bigger system. And just getting those shareholders, those key shareholders, to understand what we might be into, even with 1 hole, what we might be into is critical for us. So we're going to be out on the road. I mean, 4 weeks from now, I'm going to be out on the road. I'm going to be telling the story. We're going to share the results. We're going to have assays coming in, hopefully within, who knows, it could be, who knows what the timeline is, but we're going to be having more results coming out of West McArthur. Okay. And we're going to really start in Q3 to push that message out there, get into Q4, continue to push that message, because it's all going to lead up into the next stage of drilling at this project, probably in early next year.
Who are you working with, by the way, to tell that story and distribute those news releases? I mean, in terms of marketing or public relations or investor relations, you want to call it. I believe you worked with Red Cloud Securities in the recent past. I saw some videos, I believe, come up about a few months ago. Who else are you working with?
Yeah, well, Red Cloud, you know, they led our raise last year. They've been with us for some time. A great group that we work with. So absolutely, you know, big supporters, and we use them to get the message out. Obviously, We work with a number of other parties out there that, we do these types of video segments, that can, again, get the message out. It's about variety of audience. So we've got a number of those ongoing. We've worked with BTV in the past to get the message out, which has worked out pretty well for us historically. So that's ongoing. One thing we've started to do is think about our demographics of our shareholders, and how to reach them, because we're finding our demographic is shifting younger than older. And traditionally it's been a lot older, but now we're seeing in the last, say, 6 to 12 months, a real shift down to a younger demographic. So we need to pay attention to our social media campaigns. We need to pay attention to refreshing some of the look and feel of CanAlaska, so it doesn't feel like an old company that's been around since 2004. But in fact, we're on to something brand new here. So you've got to deliver that message in a new way. So we're actively engaged in all that. So we got a lot on the go. We got a lot of.
How much money you're spending though on that? Should you have a budget in mind or something that you can share with me?
Yeah. In terms of marketing, so including road shows and getting out there, we're probably spending $200,000 roughly. Maybe $250,000 by the time it washes out and we get a little more active. Some might say that's expensive. I say that's what it takes to actually deliver the message now.
That's annually though, right?
You have got to be out there talking to people, especially post-COVID. Everyone has pent-up energy to get face-to-face. I'll be honest with you. That's just reality. But that doesn't mean we don't continue to do these types of things and the social media and reach them in other ways. So that's probably about where we're going to land for our marketing. We'll see what we do for next year. Sort of depends on how results continue to come out of our portfolio, and that will dictate the need to continue to deliver that message out there.
What's also interesting to me when we talk about finances is that, actually what's interesting to me is that, companies would sometimes come on the show, they would call their stock undervalued, as everybody does, and then they would turn around a few weeks later and do a capital raise at 20% discount to market prices with a full warrant or something like that. And CanAlaska is no stranger to dilution, as your share count has gone up a lot over the last 5 years, but you've also delivered 3-4 new discoveries now. So fair game, I guess. I'm not trying to say anything among those lines, but do you think that you'll have to do any more of that in the recent future? Like, what is maybe tell me what your burn rate is and whether your treasury covers it for a sustained period, I guess.
Well, our burn rate is fluctuating because we're growing our team. I mean, a year ago, there was 2 of us in Saskatoon. Now we're sitting at a dozen. And a lot of that is dictated by the fact that we've built an office now in Saskatoon. We still have our shell office really in Vancouver right now, but really all the operations are out of Saskatoon. We built the team here. I brought in some really key pieces out of Cameco and Denison, people I know very well. And I'll be honest with you, that's probably a big part of this. Is a big part of our current success, is bringing in the right people to actually do the right work. And we did that big raising in Q4 of last year, timed it just perfectly, right at the tail end of November. We didn't discount for our raise. I caught a lot of flack for that, by the way, but we felt the market was there. We felt what was in front of us at West MacArthur was that important, so we stuck to our guns. We got the money in place. Now we're moving that all forward. So we're still sitting with more than 11 million in the bank today. We're still well capitalized. So do we need to go to market next month? No, we don't. We can actually move into 2023 well financed. If the share price starts to react to our marketing efforts, to our results coming out of West MacArthur, we get that price up high enough, we'll look to minimize dilution as much as possible to take more money to set ourselves up for 2023 and beyond, perhaps. So it'll be timing is everything. But right now we're well capitalized. We're not under any duress to go to market next month. But we do still need to tell the story. We do still need to anticipate raising more money to do even more work at West MacArthur should results dictate that. And it looks like they will. So, stay tuned for that. We'll see what we do, but we're very conscious of dilution. We don't like to discount too much if we don't have to, but we realize we do in some cases. Maybe not right now with our results coming.
Sounds like you're better than me at timing the market, because I wish I was selling some shares in November of last year and buying right now. I was not though, but Yeah, let's hope that's the way for you over there in Saskatoon. Let's hope inflation doesn't get too much out of hand. And I know, talking about that, you last year had quite the news flow. Do you think you'll have a stable of a news flow throughout the rest of 2022 and like into 2023? Or do you think because of the bad market and inflation and stuff like that, you're going to be sort of cutting back on releasing news into the market? Or what do you think?
No, I don't think we'll cut back on releasing news because we've got that much work going on. And just put inflation aside, we have a budget at West MacArthur that's $5 million. Year over year, that's double what we did last year. So that's how aggressive we've become with this project. We're still just at the halfway point of that $5 million spend. We still got another $2.5 million to put into this project. Results are going to come from that, and they're going to come such that they're probably going to dribble out over the next 4 months, just from that diamond drilling program alone, whether it's assays, whether it's new holes being drilled. We've still got another probably 6 weeks in this program. So you're going to see news flow coming out of West MacArthur, and then assays will follow that. Don't forget, we did a deal with this new entity, Basin Energy, for 3 of our projects that could pump in $15 million out of the ASX into these 3 new projects we staked just a year ago. Brand new projects. Again, that prospect generator thing that's going to bring that money in, and that's going to create news flow for us, right? So that exploration, if they get listed in the next, say, couple months, is going to start in Q4. And that's going to lead right into 2023. And, if results continue at West MacArthur, I would envisage that we're going to have a very busy Q1 next year because we are well financed. And I don't think we can sit back and wait. I think the project is that good. It's responding that well that we're going to continue to move that forward. And inflation, yeah, sure. We're seeing it. We're feeling it. Fuel is a big one for us. It's doubled, literally doubled.
Right.
Contract prices are climbing. That's fine. But, we just have to pay more attention to the little things that give us some of that back. And, there's ways to do that at these depths, in particular West MacArthur. We can move to a slightly different technique of drilling, which will gain more ability to pinpoint the targets, but also potentially save some money down the road in terms of what you have to drill to get there to target. So we got that on the back of our mind, ways to stretch our dollars, in this environment.
You find me 3 Fox Lakes and I wouldn't be disappointed by inflation at all, Cory. But allow me a bold question maybe here. If you know what you're going to be doing, you're going to have a lot of news. If you think that you're going to be successful in doing all that and telling the story and you don't plan on diluting too much, how come you've largely stayed out of the open market? I mean, last time you were in the open market, according to your SEDI filings, was in March of last year, and you were actually selling shares, which is at a price of 54 cents, which is pretty much the price of the stock today. And it's about the double actually of the lows that the stock got to during the July sell-off, the July bottom basically. And granted, you have been getting a lot of options, but I'm just curious as to how much of your own money you've invested into this company so far. And sort of talk to me, what is your average per share price? And also, why aren't you putting more money into this right now at these prices?
That's a good question. I don't know what my average price is, to be honest. So yes, you're correct. I was selling last year because I was capitalizing to actually exercise a lot of options and put my money back into the company. I think if you go through my track record, you'll see that pattern consistently is to actually increase my holdings in the company. It's always a tricky business. All your eggs in one basket is a dangerous play. Okay. So, I do have a lot of options. I do hold a lot of shares in the company at present. All that's public. Do I continue to put more in? The problem comes in, Antonio, is that, once I put my money in, it's very hard to get it out. And I'll just be honest with you. Shareholders don't like to see me sell. But how do I realize the benefit of what we're doing?
Talk to me about that. I've always had that question. I couldn't imagine, you're in, let's be serious, you're in there to make money, right? As we all are.
Exactly.
How do you make money on this? If you have your paycheck and all that, but how do you work around that as a CEO?
I think, when I put my money in, it stays in generally. If I'm selling, it's to add actually more shares and more ownership to the company. that's the way and that'll be my pattern. You can go back through my pattern. That's exactly what I've done. But again, that's something I think, honestly, I think people need to think about is CEOs, once they get invested in a company, you almost can't get out until you make a discovery and you're taken out or something else happens and you realize the value there, right? Which is ultimately the job is to create the value for the shareholders, right? That's what we're here to do. Yes, I would love to share in that, but that's why we align ourselves with heavy ownership. Do I need to own more than 1 or 2% of the company? I mean, probably not. That's pretty hefty. I've got to be able to play the nuclear space as well, in other angles. So, I just think people need to be aware that once I put my money in, I can't get it out like everybody else.
Right. You say it's pretty hefty though, and I'm sorry for interrupting here, Cory, but yeah. How do I know that that's the case for you? $40 million company, 1%, $400,000. That's pretty hefty for me. That's more than my net worth. How do I know that's the case for you? Maybe you can talk to me in terms of, and it's all public information, but it can make more sense if I make a ratio out of it right here as to how much do you get paid between options, bonuses, paychecks, relative to your investment in the company. Can you talk to me about that?
I don't like to divulge things like that, but they are public through the MD&A, right? So it's all out there in the public space. And that fluctuates because bonus is never, in my mind, anything you count on. So, if you have a good year, if you have a good raise, then why not be rewarded? And that's for all my employees.
Absolutely.
And that's a balancing act with, what's available to the company. And then same thing with options. You want to make sure that the employees are rewarded if there's success. That's great, but aligned with your shareholders, right? They're a shareholder too, or at least have the option to be a shareholder. And for some of them, it can be very hard to come up with the money to actually exercise options. So, and that's, from my perspective, that's something I want them to be owners in the company. I do, because then even if it's a little bit, they're aligned with it. I happen to be, fairly well invested in the company, and I have a lot of options on the table and some warrants sitting out there that, I'm going to have to be coming up with some money to continue to invest in this company in even the near term. Yeah. So, how much do I make annually? Well, it's out there in the public domain. I mean, we have to disclose that. So
absolutely, if you don't feel comfortable, you absolutely don't have to. I don't mean no disrespect at all, and I also think that people should absolutely get paid for their value that they add to a company. I'm definitely for that. As a shareholder, I just want to make sure that this investment matters as much, or hopefully more, to you than it does to me. So that's where these questions are coming from. I don't mean to be disrespectful in any way. Maybe we can talk about some, because we're talking about stock ownership, and I couldn't help but notice that there is about $1 million worth of equity securities on your balance sheet, not on your personal balance sheet, on CanAlaska's balance sheet, obviously, but you did buy those equities, if I'm not mistaken, for roughly $2.5 million. So a haircut there and in paper value. But maybe for the viewers of the channel, what companies are you holding? Why did you buy them? And what's the plan for the money that you have sitting there?
Well, most of those come through deals we've done. So, we don't go out and actively buy shares of companies. Most of that, all of it, I think, comes through deals that we've done. So we might take shares as part of an option arrangement or a joint venture. Excuse me. We own things like Fjordland, Omanika. These are all companies that we have or had dealings with. We've got shares now in Metal Energy, out of the nickel space. So that's where all that's coming from. Some of that's way before my time. I'm not even sure the history of some of those other assets that are in there, but they're down. Well, yeah, everything's down right now. It's what do you do? But I think just in the last last 4 or 5 months, we took some money off the table from Inamin. They had a good bump on some nickel results, so we took, I think, about 2/3 of our stock out and put it into our treasury. We still hold a portion of that on the upside potential there. So, that's all from deals. We try to get cash where we can to compensate for us. So we sort of at least go to a neutral state of our spend on these projects that we generate. But a lot of that entails equity. I mean, companies don't want to pay cash a lot of times, so you find other ways. So we'll take some of the risk, take their shares, put it into our equity position, and if they're successful, we're successful. And that's no different from the deal that we're doing with these ASX companies right now, whereby Basin Energy, we're going to own almost 20% of that company when it comes out freshly listed. That's pretty good upward optionality, and what we believe is a very good market coming in the uranium space. And they're getting 3 really quality projects. So there's a lot of upside potential there. You got to go out and find it.
Right.
And that's the game. But we're a major shareholder in a brand new listing on brand new projects that have a great upside potential with the first set of spend. It's could be exciting. So that's where those come from.
Very well.
Not actively buying.
So okay, you're not planning on selling them at a loss, because you also have enough money, as you said, to move into 2023 potentially, so that you should probably be fine out over there. Let's maybe bring this into the hypothetical realm, and let's say they had that $1 million right now to your name, just sitting in cash, but you had to split it between 3 different uranium companies, Athabasca or not, wherever it might be, but it's you personally, Cory. Yep. Which 3 companies would you pick and why?
Well, I'm going to be honest with you. Some of that would go into CanAlaska. Okay.
Fair enough.
Some of that would go into CanAlaska. Yes, I can't get it out, but I believe what we're doing, and I believe the market in front of us, and I believe how our projects are responding. Now, obviously, I can't buy at any stage. I have to wait till news clears the table. I have to be very open and transparent about that. So that's very much on the table. I'd probably take a third, and honestly, I'd probably go into the larger space, whether that's a Denison or Cameco type environment. That's a little bit of the sort of leveling of the portfolio. And then the other junior, well, I would sprinkle that around to maybe 2 or 3 in basin focused.
Okay.
Now, I don't want to give you names. Know why? Because these are my peers.
Okay. What do you use then? Let me maybe try and figure it out for myself. I'm not going to call out, sure. But what do you, as a geologist, judge a uranium deposit based on? Like, what are you looking for in a company?
I'm looking for one, the model and land. Okay, do they have the land that has the model that I personally, as a geologist, believe is the Athabasca model that will deliver that tier 1 asset, so that big value for a shareholder? 2, the team. What's the team? Do they have a discovery history? That's not to say that someone who's 50 like myself has discoveries is going to do it again. That's not to say that's going to happen, but there's better odds than not. And there's a few individuals in the space I've known a long time that I follow and I think have what it takes to make those discoveries. Let's put it this way: they're not going to miss the obvious signs of a deposit that's nearby. The subtleties, and we're in a very subtle business. And sometimes 2 geologists look at the same rock and one goes yes, one goes no. Know who you're investing in. So land, the people, and really just how are they structured? Are they a 300 million share company, or are they something that's more like a CanAlaska that's a little bit better structured, a little less shares outstanding, moves a little quicker perhaps on good news, because ultimately that's what we're here for. We're here to make money. And if it's something that's not CanAlaska, I can actively trade it. Right? If it's CanAlaska, I can't actively trade it, really. I'm locked in for the ride, rightfully so.
Right. So good land, good people, good share structure. That's what you're looking for in the first stages.
That's what I really look for. Yeah.
What about, because you're talking specifically Athabasca, and the companies that you mentioned are Athabasca based. Would you ever consider something else, or do you think that other jurisdictions like Africa have too high of a risk?
Let's put it this way, Antonio. One of my jobs at Cameco was traveling the world looking at all different forms of uranium deposits in different jurisdictions. And there's a reason that the majors have really shrunk back to the Athabasca. It's unique, it's high grade. One of my last jobs with Cameco was closing down 2 international exploration offices, right? Those are are there ways to make money as an investor out there around the world? Absolutely. Absolutely. But if you can find that tier one asset in the Athabasca, it displaces everything. It pushes them all out. You'll get more multiples on your money than you will in another jurisdiction. And right now, what you're seeing out there, just to be honest, what you're seeing out there around the world are a lot of what we call zombie projects. Projects we saw in the last cycle, a lot of money was spent bringing them to a different level of understanding. They still never moved to production. Many of them will not move to production until you're up around $90, $100 a pound. You know, so if we can find something in the Athabasca that sits in this true tier one, you know, potential, you're not going to have 1 or 2 times your money. You're going to have multiples on that, I believe, and that's what we're here for, right? Okay, we're in a high risk environment, and I believe the big ones are going to be found here. Still, there's a lot of opportunity out there, and you can make money elsewhere, absolutely. And some of them are moving it to production. You know, there's a number of companies out there that will be producing uranium in the market when they're in Africa or Australia. I've looked at those deposits over the years. Some of them are good, some of them are good, definitely. But you're talking about putting, you know, 1 million pounds into the market out of their production, maybe 2. You know, we have an opportunity to find something that's put 20 or 25 million pounds into the market. At a time, I believe the world is going to crave that and need it because of all that's happening in the nuclear space, whether it's just existing reactors, new big ones being built, or critically the SMRs. I mean, just in Canada alone, there's 300 megawatts going into Ontario in SMR technology. That's going to be producing electricity in 2028. Right. Well, this is not a fantasy anymore. So what's that going to do? It's going to drive the market. We're going to need more uranium, and anything we can find in the Athabasca, you know, tier one-ish, I'll say ish, because even if it's pushing toward tier 2, it's still better than most tier 2s around the world, has potential to really, really build value for shareholders. And you got to remember, you're facing a world in the Eastern Athabasca where the tier 1 production, Cigar MacArthur, is fully offline in about 15 years.
Well, there's pros and cons to any jurisdiction, I guess. And what you have in Athabasca, obviously the clear examples, the 2 biggest pros, I guess, would be size and metallurgy. The metallurgy is as straightforward as it get, right? Uraninite's what it is in the Athabasca. That's what people like it. But like in Africa, you would have fast permitting, for example. You can find something, talk about the best performer of the last cycle, Paladin. What did they do? They found they were a nothing company, but then they found something. They developed it and they went into production. They sold pounds into the market within 1 cycle. What other place can you do that? Really, that's not happening in the Athabasca Basin. So how do you weigh those pros and cons? What do you think the Athabasca really has those?
I mean, again, for CanAlaska, you know, the perspective is, yes, you're going to get those players in other jurisdictions that can move it forward in the next, say, 15 years. Let's just look at that 15-year block. There's going to be a number of production centers come online, guaranteed, again, but they're not going to be producing the big Athabasca pounds generally. What's important for us and our shareholders is, again, we're not looking to produce the uranium in 15 years. We're looking to make that discovery, build that big multiple on the share price, and get out, get it into the hands of a Cameco, Orano, some other entity that's going to move this forward to production 15 to 20 years down the road. That's not our game. Our game is still in the next 5 to 10 years here, making that big discovery, proving it up, building that value, getting it out, and go do it again. Okay. And I say do it again because, you know, if we do it right, and our portfolio still has lots of opportunity in it for yet another discovery and another cycle. Again, focused on that front end value creation. You know, so our time frame is very much near term. I'm not too worried about 15, other than what is needed in the Eastern Athabasca, and that's another tier 1 asset, because right now it doesn't exist.
Makes sense. Definitely makes sense for CanAlaska specifically, because it's sort of like jurisdiction. The better jurisdiction depends on the strategy of the company. If the company's strategy is to become a producer and be valued based on a free cash flow basis, you know, maybe the Athabasca Basin is not the best place, but if your strategy is to find something huge and have someone around you that has a lot of money to pay for that something huge, then maybe the Athabasca makes more sense. Okay.
Exactly, Antonio. Exactly. All the power to those that are going to produce uranium in the next 15 years from other jurisdictions. Absolutely. But, you know, you're going to need a lot of those to try and fill the gap that's coming. And, you know, and coming quicker than we maybe think. And, you know, I just look at it and I go, are you going to have major companies have 3 milling facilities sitting in the Eastern Athabasca doing nothing? They're going to be having an appetite for any discovery that looks like a tier 1. Period.
Cory, this has been, yeah,
it's fascinating.
It's been very interesting to chat about these things. I don't want to hold you up more than what you've promised me, and I already have. So is there something that you came here hoping to talk about and I failed to bring up?
You know, I think, you know, we touched on it very early and we've talked a lot about the uranium space. I just want our shareholders and yourself being a shareholder in CanAlaska to understand the connection between copper and nickel and part of the critical metal scenario that we find ourselves under. And, you know, I come back to the fact where you gotta generate clean electricity. That's what the world craves. Nuclear provides that. Uranium is going to be needed, a lot more of it, to feed not only existing but future demand. Then you've got to move all that, and it's going to take a lot more copper. I mean, we can't move enough electricity to charge cars in these cities without adding a whole lot more copper lines to get it to the end user. And then when it gets to the end user, it's got to be stored. It's going to be stored and delivered, and that's going to take class 1 nickel. Yes, you're going to have lithium. Yes, you're going to have cobalt. Yes, you're going to have some other additives. But the core of these batteries right now that are used are nickel. And that's class 1 nickel. That's the sulfide nickel that we find in Thompson, for instance, where we're situated. So I just want investors to understand that while you may go uranium, copper, nickel, what's the connection? Actually, they're very connected. And if you think about that broader story in critical metals and the clean energy future, or that energy utopia that we all have, that clean energy production, lights on all the time, electric vehicles driving around, you've got to have those 3 primary metals as part of that equation. It's actually a brilliant scenario, I think. And if you believe that, then CanAlaska's got the right portfolio for shareholders to consider.
That's a nice sales pitch right there at the end, because it's true. Because I've been vocal about this too. Absolutely. Not only we're going to have to, and we're going to be building a lot more, and you need a lot more copper, aluminum, and stuff like that for the solar panels and windmills or whatever. The whole energy transportation system, whatever you want to call it, it's going to have to get updated and expanded too. So you need all those metals. You talk about renewable energy, whatever you want to call it. Again, you're going to need to store that. You're going to have to make more batteries. You're going to have to make bigger batteries, come up with different sorts of batteries. It's all commodities. And unless you face nuclear, which, I mean, how far is Germany going to take their ideological stubbornness to not embrace nuclear? I don't know that, but eventually they're going to hit the brick wall of reality, and nuclear is going to have to make a bigger portion of their energy mix. And so then you have the undeniable demand for uranium, you have the undeniable demand for copper and stuff like that. So I'm fully with you on that one. It's a good point.
Well, thank you, Antonio. Yeah, it's exciting times we're living in. The future's wide open, but you know, if we have this this dream state in front of us, there's really only a few ways to get there, and get there in a time frame that makes sense for the planet and for society. And I think people are just starting to realize that, and that bodes well for the future. No matter what's happening geopolitically, that bodes well for the future of critical metals like uranium, copper, nickel. So pretty happy about it.
Mr. Belyk, thank you for investing your time with me.
Thank you, Antonio. Real pleasure. You have a great day.